Well, belated good morning. I'm sitting here busy working on something and didn't even recognize what time it was. That's pretty stupid, huh? So this is my virtual trading journal. 9 minutes late, sorry. The idea here is that it is my personal virtual trading journal. So it's not for financial advice or trade advice and, all that usual disclaimer stuff, which is very important actually, especially the past performance is not indicative of future results. That's a really big deal. And that speaks to the fact that the trading markets, especially futures trading, or, well, at least for sure futures trading, is a random environment. And the only way to have a successful business in it is to approach it from a process, statistical perspective. So there is no, like I said, there's no financial advice. The description, and there's a disclaimer in the description here. I stream this to YouTube so that I can review it on any device. It provides the best source of transparency and accountability that I have been able to figure out. All of the times here and that I refer to are Central Standard Time. I'm going to jump right on to the next important thing, which is we have at 1300 today. You'll want to just be sitting on your hands probably. It's FOMC minutes, FOMC decision, and then press conference. So there could be a lot of shenanigans going on today. It's been one of those weeks, right? It's rollover and then triple witching on Friday and FOMC today. And so there's a lot of moving and shaking going on. Be real careful with whatever you do today. Looking at the pre-market, we had first of all, this is our book map where I trade, and you can see what happened. We had a little pullback, a giant spike up. We've just kind of been rotational all night. This is IRT, which is my charting platform. Here's yesterday's trade. Here's the overnight. At the moment, we are looking to open higher in range because range was this long goofiness right over here. This is the NQ. This is the ES. This is the NQ. This is the micro composite for the ES, and this is the ES volume or market profile. By the way, just in case you don't know, this was rollover week, and we are now trading the M contract, which is June. Clearly, we have way more volume in M than we do in H, so I'll take this off here at some point today. Maybe I'll just move it over here for now, like that. That'll work. Okay. So the purpose of the micro composite is that wherever price overlaps, I continue to draw this volume profile around it. That creates the micro composite volume profile and the micro composite VPOC, and these high and low volume nodes push automatically to bookmap. None of the other data does. I type it manually. These red and green lines are high and low volume nodes for this micro composite volume profile, and that pushes to bookmap. These are the session prices, which also push to bookmap. So jumping back to the micro composite, here you see the POC and naked volume points of control, which are no longer because we traded over them yesterday. And the way I do this is when they are not fresh anymore, I change the text to black. And then I'll remove these, any stale ones this weekend. These are the high and low volume nodes. This is the full session micro volume profile, which started plotting at 1700 last night and will continue through 1600 today. It's not the ETH, it's the Globex or full session. This is the RTH session volume profile, which will reset at 8:30. Chart volume profile, which just plots what's visible in your chart. And this is a real key column for me. This is my notes column where I, first of all, as you see me do here, change the title of this column to the current open type or the expected open type. And once again, how do you determine that? It's where we are likely to open or where we do open the RTH session as it compares to the previous close and the previous range for RTH. So we are within that. The RTH high is way up here in the corn patch up here. And the low is way down here. And the close is in the middle there, somewhere buried underneath one of these other flags. This open type will dictate what statistics study we use for these associated price levels. These are the IRT price, the session prices. There's no indicators on my book map or IRT. I have a volume profile for both RTH and full session, VWAP for both, and a mid for only the RTH session. There is the IB high and low, which are just the high and low of the first 1 hour of the RTH session. IB refers to initial balance. It's an old market profile term. And that's it. The PO, none of this stuff is mysterious or magical, right? The POC just marks the price at which the most contracts have traded so far in the session. That's it. Right now, 11.50 or 15.14 or something in that area is the highest price. And the minute one of these other levels around here trades higher than that, oh, I'm sorry, this is the previous RTH. Here's the full session, so we're up here at 35.87. The minute one of these prices is 35.88, that yellow line will move. That's all there's to it. Easy. And the book map, this gradation or the heat map is a reflection. These accented areas are reflections of resting liquidity in the book, which is, if you traded more than 10 minutes, you'll know it's probably pretty much fantasy land, but anyway, gives you somewhere to start. So there we have that. Now, in order to get the statistics, what we need to do is jump over here to this study. And we're looking to open higher in range, right? Once the open occurs, Bookmap will highlight the proper column, but as it won't happen until 8:30. So we look back at 1,932 days. Of those 1,932 days, 585 of them opened higher in range. Of these higher in range days, price revisited the overnight point of control 83.8 times. Overnight volume point of control, 83.3%. Boop, that's all there is to it. Overnight, the mid is usually the second highest one, the overnight mid, and then the overnight high, which is 75.0, because I happen to see that right here. The overnight mid, which is right there, is 777, I suppose. No, it's double 7.6. Changed a little bit with the difference in days. And the overnight low, how low can you go? Well, the previous close is 70.9, but I don't see that lurking around here. It's underneath one of these guys someplace. What's this right here? Nope. All right. Overnight low is 50.9. There you are. So then next typical is the previous high and low. Previous high is 55.6. And the previous low, that's interesting. Previous mid is 70.3. I didn't really think that that was that important, but let's look. There you go. And the previous low is 38.2. 36.2. Not very probable, eh? Now, these are just probabilities of the number of times price revisited these price levels, these, session price levels, looking back in history. Remember, past performance is not indicative of future results. They're not hard and fast targets. They're not something to bet the house on. These are, you can use them as targets or, suggested targets or whatever kind of word you want to use for that. But anyway, there we have that. So those are our statistics in place. And now I'm going to do something here that I do every morning. And I can't do two things at once, so bear with me. All right, there we go. And now, okay, so one of the most next important things, I guess, what you could say would be to be able to trade. And the way you do that with Bookmap is you have to click the trade control panel and select a way to interact with the application. Chart means that if you click somewhere over here, you've entered a trade or an order, as I erroneously did yesterday and cost myself $225. Dome, you can only use the mouse on these in the dome columns, and both obviously double jeopardy. Now, I initiate trades with my keyboard typically. So I select the dome to prevent a problem or an unforced error, just like occurred yesterday. And you can go back and look at that stream if you want to. It's about an hour and change, I think, an hour and a half. I don't remember the exact time stamp. It's like an hour in. So there's that. Now, in addition to the trade control panel, and something else I do, well, can't do that with a pop-up open. I also use multi-brackets. And I use a risk-neutral philosophy or system, which has very few requirements, but is really, really great. You have to use an even number of contracts, which will be obvious in a minute. The stop for all of the packages, in my case, 12 ticks. It has to be the same stop for all of them. Then the risk neutral first target or scale is at the same amount of stops positive as the stop loss was, the same amount of ticks positive as the stop loss is negative. And that is for half of the package. Then you have the balance at whatever, risk-reward ratio you want to have. Now, in the case of the 4 lots, 4 contracts, 12 ticks. 2 contracts, half the package at 12 ticks, same as the stop. Then you have 24 and 48 for the 2 runners. That's how it works. Okay, after I have done this and selected that in the multi-bracket, I confirm that my size is what I selected in multi-brackets, and then I choose to turn this off by just clicking again so I get the real estate back, and I don't trade the P&L. Okay, we're going to open in 6 minutes. All right, open in 5 minutes. What am I doing now? Where am I? Who's on third? Okay. So again, we're in rotational ETH, pretty wide swings, 56.57 to 56.89, 32 points or something like that. But it's rotational. So I would expect that there will be some sort of responsive selling to take profit. But we've had a pretty much balanced rotational day, right? A little skew to the upside, which would indicate short covering or selling or buying, I mean. And we are pretty much 100% or 90% anyway inventory long. That means it's straight above where we opened. So we'll see what happens. Yesterday I thought we were going to be rotational also, and look what happened there. Okay. I think I've sort of got it all covered up. Sorry for being late to the party. I was just standing right here typing something on another machine and focused on that. Well, it looks like the stream is trickling down the hill, so that's good. We're 28 minutes in the stream, meaning that we're going to open here in 2 minutes. And what else? No danger of open type changing with the RTH highs way above us, so that we can't get in or out of range. That's a good thing. There's the previous close. That's what I was looking for. Okay. That's 70.9% of the time we're going to get that boy. So the open type, once again, is the relationship of where we are going to open today's RTH session as it compares to the previous RTH session close right there. So we're higher. And the previous RTH range, we are definitely within range. So we are higher in range. The reason I do all of this right over here and why I flag, here we go to open, and why I flag the what the hell was that all about? Why I flag the migrating BPOCs is because pretty soon this yellow line and price levels will all scroll off the left, and I want to have all the data I think is important right here on the hard right edge. So that's why I do that. Big pop into the open, huh? Got a minute left, and they're getting all excited about whatever. I don't know. They're getting excited about, but something. Been pretty volatile lately. There we go. There's our open. Something's not looking right here. Why didn't our POC move? I guess it did. It's just exactly. There we go. Behind the other one. So there's our first migrating VPOC. See the bright yellow, and then the more muted yellow is the full session. So much for my responsive selling idea. So we've taken out our mid and our VPOC, I guess. Well, maybe not the mid yet. Nope, we didn't get down to the mid yet, but we've taken out the VPOC. I believe we opened right on it. Pretty damn close, anyhow. And we'll have the open up here flagged in a minute. It'll be one of these pink-looking boys. Remember our definition for the IB, which is the high and low of the first 1 hour. And there you have that. Okay. Kind of getting off to a little bit more of a normal kind of start here. There's no, well, there is lags, 6 milliseconds. There we go. Now it's cleaned up. Open interest is 1.88 million on this new contract. Definitely wait and see this morning, I would say. I would recommend. And that's starting to sound like a stuck record to me too, but you know, the whole purpose of this stream is my journal, right? My virtual trading journal. So I'm narrating to myself and out loud. What am I thinking and why? If it wasn't for the audio piece, you know, Bookmap very, very accurately records all the action of the day, tick by tick, pretty much. But two things, it doesn't record the audio and it doesn't record anything on this other screen over here for Bookmap or for IRT. Yeah, it's going to be kind of an interesting morning, I think. It's pretty crazy times with all of this random, and this new guy, you know, Trump is just he's such a camera hound. He can't, no president in history that I can remember has had press conferences every day for signing executive orders. What kind of, you know, they all do it, but they just do it. They don't make a big deal about it. I mean, so you got to be careful because he takes every opportunity. The reason I say that, I don't care, you know, politically one way or another, but the market hangs on every word, right? So he can tank it or it fly or who the hell knows, some offhanded comment about tariffs and the bottom falls out. Or at least you for sure have an issue with managing risk. At the moment, the market is up. So, well, actually, it's balanced. Here's yesterday, RTH, and so far today. And it would not be surprising at all to see that continue until 1300, when I would suppose all hell's going to break loose. Must be amazing, to be like Powell or somebody. You can say one word and the markets fly 50 or, a percentage point. So far, we're up 0.3% on the ES. NASDAQ's up 0.21 or 3.1. I'm referring always to the new contract now. So what have we got here? We've got a 9-point range. Basically, well, 10. Call me a liar. That's a pretty tight sandbox there. Really disappointed in that error yesterday. And I didn't take time last night because I was real busy with delivering people and family stuff. What I did obviously was I left-clicked below the market, which puts in a limit order. And that's what it was. How I did that on this side of this little line, I don't know. And I've got to review the stream to see exactly what I did. It's really disappointing because I am of the opinion at this point that using the mouse is quicker. And, the faster you can shave time off your entry or a few ticks, one way or another, improve your entry by a few ticks, the better off you are. For example, here I am with the mouse moving around and looking at stuff, and if I saw something happen. Now, the good thing about a vetted trade and only taking trades which you have vetted, proper setups with an expectancy, is you are not surprised by anything. You anticipate them. You see them starting to set up, and so you're getting your brain and everything ready for them. And if all the keys fall into place, you open the door, turn on, you click the entry. But if you're looking at stuff and then all of a sudden that trigger happens, you got to go from the mouse back to the keyboard, and that's a bit of a delay. Whereas you could just click one way or another and you'd be there. So it's frustrating, but it cost me 225 points, and I was so shocked to see that order sitting down there. It took me a second to react to it, and then I succumbed to the horrible error of, well, will it go my way? I mean, that's like, that's the newbie version. I should have killed it instantly when I saw it, which I can do with a keyboard, or, well, I keep this closed, but if you have this open, you can flatten or cancel all. It's really disappointing. I've got to practice using that a lot over the weekend in my study time every evening. So yeah, real tight and just all over these levels. No meat on the bone here, no range. Typically, I don't consider an entry valid, even though it's a vetted setup, if there is not 3-point range to my, unobstructed range to my first scale. And any of these levels are obstructions because they're places where the market can react the other direction, bounce or whatever you want to look at. That used to be a real hard line in the sand in my trade plan, but I've reduced it kind of to a discretionary point because I would stand here for days and not be able to get in a trade because there was no 3-point scale, to the obstacle. And you can't say, well, okay, here's 3.5 points. And I'm not going to get in right there unless I've got a resting order. You know what I mean? So entry location it's really important in anything you do with trading. But in my case, with that range requirement, it was a big deal. Talking to a muted mic. I was talking about that we don't have any possibility of or likelihood of a VPOC migration anytime quick because by definition, it's the price at which the most contracts have traded so far in the session. That means right here. And that's great. It's got to be greater than 26.20. So one of these other prices has got to be greater than that, become greater than this one in order for this to move. Simple. Now we could be looking at mean reversion, outside in, which is a great trade, and that's a real typical, I think it's 89 or a high 80s% of the trading days are rotational, where mean reversion is a successful strategy, meaning only, 12 or 10 or something like that percent of the time they are trending or directional. Disappointing. I need to turn up the heat and get some trades in the bag. In general. And I'm not sure whether to move to micros to remove this analysis paralysis or what to do, frankly. Ooh, look at there. Well, there's something. Now, what was that? That was crude oil, right? No, crude oil was at 8:30. There is no news out at 8:45. But you can bet your ass somebody said something. I mean, that's 76 to 89. That's 15 handles in the blink of an eye. Something happened. Something happened there. Putin stubbed his toe, or, Trump fell out of a golf cart. God knows. It's getting so crazy, Trump's defying court orders. Federal court order. And his buddy in El Salvador sends a tweet on X, oops, like it's a joke. Really shocking to me. Even the Supreme Court came out and said that was absolutely bad thing to do. And he's got most of them in his hip pocket, it appears. So I don't know what's happening here. Well, we're rotating pretty orderly here, except for that last little blurb right here was not very orderly, but here we are, rotational. Well, I tell you, that jerking thing really makes me crazy, and I have no idea why. It's got to be within IRT, because my computer's got more than enough horsepower to do everything it wants. So we've got a real fairly balanced, basically little second distribution down here, but, up, down, up, down, up. Are we going to go down again? Rotational day so far. And it's this noise now. Something happened there. What was that? I don't know. Irritating. Go get a water bottle full. Be right back. Uh-huh. So now we got a zipper building at the top. My initial reaction would be to think we're going to test lower. Here we are. Here's our micro composite, right? Day before yesterday, here's today. We've got this MCVPOC down here that's been pretty well viewed, the wick test right to it in the close yesterday. Within a few, points one way or another. They wicked down here a little bit, then they're looking north. I'm not sure what that is, and we still haven't tagged out the overnight mid. So I guess conventional wisdom would think we're gonna trade lower, but what they say about that. Who the hell knows? It's a random market in a random environment. The only hope for success is to have a vetted trade where you have, I might as well do this right now, I guess. The secret to having a successful, consistently profitable trading business is to identify a setup and the criteria which validates the entry for that setup. Then you capture historically away from the live market with however you go about backtesting a statistically significant data set of that setup and that criteria. Then by one. Oh, my cat's going nuts. Opera singer over here. After you have captured that data with the specific criteria, you determine mathematically, statistically, does it have an edge? Positive expectancy, whatever term you want to use for that, but you know what I mean. And if it does, then you take every instance of that setup and those criteria that present themselves in the live market, and you rely on the law of large numbers to manifest the edge to your bank account. That's not my thinking or, philosophy. It is my philosophy, which I've adopted, but I didn't work it out originally. That comes from the most professional, successful traders in history. Jim Simmons, Ray Dalio, Tudor Jones, Tom Sosnoff, Linda Bradford Raschke. Pick one, anyone. Mark Douglas, Trader Tom, current people, Pick one. And just listen long enough, you'll hear them talk about taking a setup or a process and where you take a number of occurrences, and that is the key to success. That is actually the holy grail of trading. It's not fun. It's a lot of work to, figure out how you're going to capture all that historical backtesting. And it's got to be the same. You can't have 10 tick stop one time and a 20 tick stop the next, and it profit targets different places or scales. It's got to be the same criteria. Otherwise, the data is meaningless. It's not statistically significant. If that sounds familiar, it's exactly the business plan of a casino. Business model. They play no games which they have not pre-identified an edge with specific rules. And they know that their job on the casino floor is to play that game as many times as they can in 24 hours. They know that gamblers will win. We know that traders will take stops. That's a cost of doing business. But if there is an edge and you take enough occurrences of that edge, the profit percentage, whatever that may be, 10, 2, 10, 50, whatever, will manifest itself via the law of large numbers. In other words, the law of large numbers. If you have a 10% probability on one trade of $100, that's $10. Do that over $1 million, and what's it work out to? Law of large numbers. And that's the secret to trading. That's actually the holy grail to futures trading. There's, crypto and Forex is so rigged and bucket shopish that I don't even want to think about it. But that is the secret to a successful, consistently profitable trading business, as opposed to a video game or gambling or whatever else. And all those things are fine and fun if that's what you want to do. I personally need to have developments in my life recently. I need to rely on trading now. So that's what I'm going to do. And it's, there's a lot of aspects to that too. If you have if you have an edge and a setup and a criteria that you've already identified, as I was referring to earlier, nothing's a surprise. You're not whipping and spurring or going at trading like you're killing snakes. You're stalking the trade and anticipating. You see the setup start to occur. Do the criteria fall into place? If they do, does the trigger come into place? If the trigger comes into place, you execute without thought. And that's a big difference. You need to really understand that is a big difference between just, short, long, I'm just throwing darts. That's not the same. You've pre-identified the setup and the criteria and hopefully the trigger, and you've captured a historical data set. Obviously, everybody knows historical data is not indicative of future results, but you got to start somewhere. And another thing that's really important to realize in trading is that the outcome of the next trade is always nothing more than 50-50. The market only goes two ways, up or down. The horizontal movement is based on time, which we as people put on it to make a chart work. So that's truly the holy grail of trading. And, like I said, that's not just me saying that. That's the most successful people in the world. The traders and hedge fund managers in the world, Soros and Jim Simmons I think, still stands as the most profitable, most successful. And following along with that, I'm not sure I mentioned, or I don't remember, risk, your main job as a trader, after you have identified and statistically vetted a setup, is to manage your risk. None of this work, homework, study, standing in front of the screens for hours and hours and hours does you one good goddamn bit of good if you're broke, if you've blown up your account. And the way you prevent that from happening is risk management. Be a big boy or girl. Don't don't let FOMO take a hold of you. Don't make, like yesterday, don't make stupid unforced errors, or, cut all that stuff to a minimum. That's really, really important. I guess that's the most important job of you as of a trader, is to manage risk and be able to trade tomorrow. What else? All of the rest of it is academic bullshit. Well, it's just horseshit and bus tickets, as an old friend of mine used to say. We're at the Globex high, which is the overnight high. We're just doing all kind of magic stuff up here. I don't know. Who knows? We're just coming up to approaching the wicks of yesterday's RTH period. That's right there. Quite a bit of liquidity laying out here, looks like. Certainly am not going to short it. Trying to get used to turning that music on and some of the Be Right Back stuff. And I as I mentioned last week or something, trying to put together a playlist or compilation or whatever of music, kind of backgroundy music, so that there's not just dead air when I'm standing here not talking or gone away or whatever else. And half the time I forget to turn the thing off. The system has ducking, so that's not a problem. Even if it's on and it's muted, then you can still just talk over it and it ducks out. Settles down here, don't forget. Right at the close. Well, we closed and settled pretty much together, which is not always the case. Well, there we go. Out the top. They're definitely squeezing them. That's for sure. Now we've got two distributions to the upside. And I don't think it would be advisable to short an outside in. We've only had one basic rotation lower, and then away we go. Don't forget, here's the open. Here's 830, right? So what a lovely place to have gotten long on that. Well, that's quite a bit of jumping around in the first 45 minutes here. And, in the rearview mirror, it's always so easy to spot these things and get on the right side of them and know there's exhaustion and I'm long and, the internet guru technique. Internet gurudom. Uh, 9:15 approaching, so I guess we're getting to the IB statistic and all of those things, which happen at 9:30. Remember, it's the IB high and low, or simply the high and low of the first 1 hour of trade in the RTH session. However, there is a statistic associated with those levels, widely known and calculated for years. Over 97% in all four open types the IB high or the IB low is exceeded by price in the balance of the RTH trading session. Kind of tough to trade because you don't know which it is and you don't know when it is. Could be, millisecond after 9:30 or 1 millisecond before 1600. But anyway, that is a very, very definite statistic. And it will be valid in another 16 minutes or so at 9:30. In addition to that, the colleague Rod, who is a good trader and statistician and code guy and programmer, etc., does a lot of statistics, and he came up with one which we refer to now as the IB30, and that says that there's about an 89% probability that the high of the first 30 minutes or low of the first 30 minutes is exceeded by the high or low of the second 30 minutes of the RTH trading session. So that we refer to as the IB30. And then the old-fashioned one, IB statistic that I just was describing first, is referred to as the IB60. And it remains the same, greater than 97% probability in all four open types. Today's open type is higher in range. I think it's 97.3 or something. Oh, no, 97.8, sorry. Here it is, 97.8. Be high or low in this open configuration is 97.8% of the time. 97.6 in higher outer range, 97.9 lower in range, and 98.2 lower outer range. So, as I said, greater than 97% in all four open types. That's a pretty significant statistic. with the volatility we've been having, that adds to the concern. But it's not particularly volatile at the moment. I guess it's jumping around quite a bit. Look at this stuff here, Look at this crap. You can't even have the scale down to $1 or 4 ticks per regiment and be able to capture everything. It's just annoying. So I'll be waiting until 9:30 to see what happens here at the IB, and then whether we'll have two trades, which I have. I would say 3 setups, which I have just about concluded vetting or identifying, are the IBF failure, the IBC continuation, and mean reversion, which we're not doing anymore so far. We've turned directional and we're now, for whatever the hell reason, going that way. I guess squeezing out some of the shorts from yesterday, I guess, because they... So, what are we doing? Short, 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 short. Long, long, short, long. I guess we did trade all the way up to here, almost to out of the MC, so that you would think took out these people, these shorts. Maybe not. Maybe some big time frame folks are holding above it, stops above there. I don't know. What we're doing over here in the market profile is there's the goofiness. There's yesterday's long liquidation. And now this, where we're just basically repairing this real thin string of singles here. Notice that? Just trading over the top of that. Funny how that happens. Repairing the profile. Whether anybody really looks at that, or whether this is just stuff we make up. According to Tom Sosnoff, this is a pretty funny story, actually. According to Tom Sosnoff and those guys at Tasty Trade or Live or whatever it's called now, what used to be Think or Swim, and then they sold it, and he's now made a couple $2 billion doing this. He was an options market maker, as was his sidekick there, Tony, and I suppose some of the other guys on the floor for a long time, in the pits. And when they decided to build Think or Swim, they got it all built and released, and all of the, people started, emailing or questioning or whatever, were the charts. They hadn't even considered using charts because they never, in the history of their careers, had ever looked at charts. They looked at the dome and the numbers. And he told the story about himself. And he said, I hurried up and scrambled around, and we found, and he named the guy out in California who had built a charting package that was pretty slick, and we leased it from him to put into Think or Swim for the full release while we could build, a replacement. They had not even considered including charts in Think or Swim, because professional traders, and if you ever notice this, the guys on the specialists and the NYSE and those guys, they're all looking at domes. That doesn't work for me because I'm dyslexic and those numbers are just soup. I do continually watch the dome, and the heat map is essentially a graphic representation of the dome. So, that's why I try to use Bookmap. But that's a pretty funny story, and he told it about himself. So I believe it's true. And what are they accomplishing here? They've traded it all the way up here, and they are bobbing around just over the top of yesterday's high. Didn't look like there was a bunch of stops up there, which is kind of interesting, isn't it? You would have thought more would come bleeding out of here quickly than 174 and change. Now we've got this big consolidation in the IB high, and we're going to be right here is the IB set. That's 930. Now I see something else going on over here that's freaking me out. What's this sell stop shit all about? Jesus Christopher Christ. I don't know where the hell that came from. Good God. It wasn't reflected on Bookmap, which is, understandable. A bitch. I don't know what's going on here, but man. I caught that and killed it immediately, so I wish I'd have done that yesterday, but yeah, what the hell is that all about? Maybe I'm going to start doing this, and so I see if I've got some goofiness going on over here quickly. The problem with having this there's a little window you can open up here that's can have any of this, position, unrealized total volume, and total price or total P&L, unrealized P&L volume or number of contracts, and I forget what the A stands for. Oh, there you go, average price position. You can have all of these in a bar up here, but they don't show resting orders. The only way you can tell if you've got a resting order on is see what you've got laying out here, or that line that shows up on your chart. Now, a couple of months ago, somehow or another, I had a resting order which I noticed and canceled, but it was way off the screen, right? It was way off the visible, so I couldn't see the line. I couldn't see the resting order on the dome. And it was not reflected over here, nor would it have been up here. So I've always been a pretty, firm believer in don't trade your P&L. Just trade the market, and the P&L will take care of itself. And that's why I keep that shut off. Plus, it gives you some more real estate on your chart and whatever else. But I was just looking over at Bookmap at IRT there and seeing that down there on the market, on the micro composite chart. Jesus, Christopher Christ. Cancel, flatten, cancel. I clicked that a million times. That was pretty surprising. Jesus Christ. Yeah. Now with IRT, you can quickly switch accounts just by going to this account drop down, which I will not do, because it shows all the account numbers. But you can just click this and you pick the one you want, and then that's where the trades are sent. Bookmap doesn't do that, or at least I have not figured it out, where you can't trade. You can't change. You log on to an account when you log on to the live trade session, and you got to get back off of that to change accounts, I believe. Not that that's something you need to do in the middle of the day, but if you've already got your day running, like for example, if you've got a couple of accounts and you've made a trade or two on one of them for the ES, and you want to make one on another, it would be handy not to have to shut it off, turn it back on, and then all the data goes goofy and not very convenient. And this is one account, so that's not an issue. But for example, if you have a couple of evaluation accounts and you want to switch between them, or you have a couple of private accounts and you want an IRA or a regular one or something like that, whatever, you know what I mean? And so I'm not going to, I think it was muted. I was talking about the bar trade just when we had the VPOC migration. And I'm now going to reiterate why I'm not taking that setup, because it's my worst performer. Has the worst probability so far, and a lot of people love it. What I was talking about the bar trade, is this the consolidation and this the breakout and the retest? Or is this the consolidation and this the breakout and the retest? That's subjective move on the granularity there. That's a toughie for me. Well, we're at 6 to 8. So if you took the VPOC migration more or less mechanically and went long down here at the pullback, oh, now we got another one. Say 5, you're 8, so you're scaled. And then you don't care. Then you don't care anymore. But typically what happens to me is I'll do that, what I think is the proper context and trigger, and then it'll do one of these numbers and stop me out, and away we go. So that's why it's not been a very profitable trade for me. Profitable setup for me, I should say. It has a poor expectancy, so I don't do it. God damn it. I'm busy talking. So what I was saying was our context is north, right? It's up so far today. VPOC migration is up. IB statistic is in play, and it's just above us. Well, handful of points above us. We had the VPOC migration, and what happened? Okay, if you got in down here, you're a wizard. You're scaled. If you didn't, and you got in anywhere along here, you may or may not even be scaled, and you may or may not have been stopped out, depending on your entry. There's 5, and there's 3. So you were a point away from stopping in this VPOC migration trade. You know, I know I harp about this every day because it is so obvious, and it is clearly the easiest set up to identify how the hell can you miss the yellow brick road here, right? But it has been my least, it has the least probability for me, or expectancy. There's another thing that's pretty important to understand or to wrap your head around while we're standing here doing this. The fact that the market is random, that everybody knows that. And, you know, the outcome of the next trade is 50-50. And within a random environment, there can be a random distribution of outcomes. That's perfectly normal and well-accepted fact of statistics. And what that means to us as traders is, using the coin flip as an example of a 50-50, because everybody recognizes a coin flip's 50-50, right? There's only two possibilities. It's quite conceivable in a smaller data set or looking at the market. Sorry, yeah, it's quite conceivable in a smaller data set of or look back period, say 1,000 trades or 1,000 coin flips, that you will have a random distribution of 20 heads in a row or 20 tails in a row. In trading, if you don't have a large enough look back in your data set for back testing, you could be looking at an isolated data set containing a random distribution and completely miss the point about your setup. You could have the most wonderful, profitable setup in the world long term and look at a 1 year or 2 year back test, which has a random distribution of 50 losses, and you throw it out the window because you say it's a terrible setup. That's very, very current. And that's also something that you really need to plan on about trading. Absolutely, you will have random distribution of both wins and losses. Everybody's all excited about he's on a heater because he's had 10 winning days in a row. Yeah. What do you call it when he's on a loser where he's had 10 losing days in a row or losing trades or whatever it is? You understand? It's very, very common and fully understood and expected that there will be random distributions within a data set. That's why it is so important to take as many occurrences as you can. because it smooths that out. You know, you flip a coin enough times, it will come out to 50-50. But until then, until that point, there's an edge one way or the other. But is it real? That's something that you really have to get your head around. I have to get my head around. And looking back at that VPOC migration I was talking about and why I don't take them. If you're lucky enough to have gotten scaled, okay, you scratched. If not, you just took a stop here or here or here, or for damn sure here. Assuming that you have any kind of intelligent risk management. Or I shouldn't say intelligent, I should say any kind of a, normal risk management. I mean, most people can't risk 30 points. Now, that's another thing that's very important, is to realize that in a volatile environment, and you're remembering that your, prime directive as a trader is to manage risk and be able to trade tomorrow, there's only two things you can do, and that's size down and widen out your stops. Well, you can't widen out your stops without sizing down, or your risk reward ratio, your risk tolerance and your risk ratio just went out the window. And in my case now, I'm down to a 2-lot. I was trading the 4-lot, and that works out great. But I'm down to the 2-lot to try to, lessen my trepidation about putting trades on. The only move I have now, if I want to size down and widen out, is to drop down to micros. That's why I track micros up here. That's the idea. That's the only thing you can do. And that's the prudent thing to do. So there's that. And what trade or setup would I have down here? Now, there is one that is a setup called the VWAP or mid VPOC. That would be in alignment with context, and it is a valid setup. It is not one of my higher probability setups. And in this environment, I'm going to stand aside. Because I don't want to take a loss. I don't want to, after yesterday especially, I don't want to lose. I'm going the wrong way from my milestone. A week ago, I was one trade away from my milestone, or whatever, 2 weeks ago, whatever it was. And now I'm 2 away from it. Now I'm 3 away from it because I took a stop. An intentional trade stopped. And then that error yesterday, not a full stop, but certainly an error because I didn't just kill it immediately. And it would have been a, no harm, no foul. Or however that saying goes. Instead, I took a $225 hit, which is 18 ticks. No, no. If you were perfect with your entry, you're not scaled yet. I'm assuming they're going to go down and take out the MCVPOC, to be honest with you. I think this is just speculative shenanigans to make what they can and get the market. They're going to put the market where they want it to before 1300. You can bet on that. Wherever that is, I have no clue, but that's for sure. Well, there's a scale, so that's good. Anybody that took that would be scaled out now. However, depending on how your entry would have been over here, no, not quite. Well, if you were up here around 80, if you were late on this entry, you're stopped. That's the problem with this volatile market and the average true range that we're experiencing now. There we go. So hopefully somebody got on that. And look what's happened now, boys and girls. I was just typing with some folks, colleagues. There's a few of us in Static that keep a pretty current dialogue going. I'd like to have that happen here. We need more people. I guess more likes or subscribers or something. Participation somehow. It'd be nice to end up with a live voice going on, so people could actually be working together. Oh yeah, they're gonna come right back down. To there. I'm guessing. And there is no setup that's mid VWAP, or any of that noise. It's a structured trade. There's no question about it. If you vetted it for yourself, the VWAP VPOC or the mid VPOC, but I think that they're going to just keep hammering it up and down. I think they're going to be looking for that MCVPOC below. They were making some money this morning, taking out some fuel, getting some inventory taken out. And then they're all, just waiting to see what's going to happen at 1,300. That's my opinion. And, what they say about opinions, right? And I'm not, negative about this enough to think that I'm going to, try to take a short against. So far, context is still up. We've just now traded across the bottom of that distribution. Here's the lower distribution, and they didn't like that one. So now they ran up here and did a bunch of noise, and now we're right here. Are we going to rotate back up? Are we going to fall out and head down, trade into this? Who the hell knows? Who the hell knows? But and here we are in another consolidation. This little bitty one right here. Is that a breakout? Kinda. And it's kind of a retest. Yeah, so, I picked a bad week Need to turn the corner here, I guess. Yeah, shit happens, right? What I was going to say here is that, yeah, I think I hope, I don't know, I was muted or not. I picked a bad week to need to turn the corner pretty bad, but around 1300 to 1330 today, there's going to be some movement. You can bet on that. And unless you're a real seasoned trader with a definite plan in place for a big event like FOMC statement, etc., flatten out and stay that way until it's over. And something that you need to remember in case you don't know, yeah, you can put a stop in. Of course, everybody does. Anybody with a brain puts a stop in my opinion, that's concerned about, that realizes the importance of risk management. Anyway, a stop becomes a market order when price gets there. And that market order will fill at the next available spot. And you could be 50 handles away from where your stop was before you get filled. There's lots of horror stories about that. So don't think that a stop is, you're going to be guaranteed out the door at that place, at that level. That's why those kinds of, some prop, I don't know whether they still do it or not, but I think any prop firm that's a real prop firm, they have rules around releases. You can't be within a minute before or after and in a trade and all that kind of stuff. You have to be flat. Because they realize that they can't manage risk. Even their risk managers, their top trader can't manage the risk. If it moves, 20 handles in 0.3 of a second, what are you going to do? So caution, use caution. 3 hours. Well, 3 hours of 29. 3 hours and 29 minutes till Powell speaks. And it'll be going crazy from 1300 on. I don't know how long he'll speak, probably 30 minutes, I guess. So it's about 1300 to 1400, I suppose. Well, if you're an old-fashioned guy, there's a double bottom. Whatever the hell that means. But you could also, the funny part about trading, there's a saying for every situation, right? For either side. Here's a double bottom or a higher low, and here's a higher highs, we're going up. Well, here's lower highs, here's lower lows. You can look at the market anywhere and have a well understood saying or marketism for either direction. And quite obviously, if you're quick, you could have taken a lot of different trades down here and made money. Or, you know, and you don't subscribe to the only trade vetted trades philosophy, which I do. I'm trying to really stick to. So, yeah. Well, this is one thing I guess I will say here. Let me just make sure I'm not lying to myself again. It's not terribly volatile, right? Again, you know, it's sort of getting back to where it's a little bit. I got to have an ATR chart here somewhere. Let me look around on my secret hidey hole in IRT here and see if I don't have an ATR thing going on. Oh, was talking to the damn muted mic again. Shoot. I was looking to see if I had a average true range chart floating around over there. I got to put that number somewhere. Can't do it. You can't do average true range on Renko, I'm pretty sure. So you have to do it in another pane underneath it here, based on 1 minute candles. Well, we're going up from that mid to that VPOC, and anybody that did that's all excited and happy. Or somebody said, "Oh yeah, I came back in from having breakfast and I took this VWAP to VPOC, and that's a very good trade. There's, damn near 10 points." But but if you tried it over here, you got stopped out. If you tried it here, you got stopped out on the mid portion. Yeah, I don't know. Rear view mirror trading, so easy and so clear. Well, and here we have a VPOC migration south. Now, they've had all their fun up there, and now they're going to come down this way, I guess. So are you going to take that short? Does that mean it's going short now? Don't forget, we still have the IBs open. And we're much closer to the high than we are the low. And I can't stop yawning. All right, what are we going to do now? Are we going to go out the bottom? So this would be referred to from the traders lab, fellows and traders I know, as a price check at aisle 3. Is this still too high? Again, there's a saying for everything. For every situation and for both directions at the same time. Whoop, whoop, whoop. And this is the migrating VPOC, just like the yellow line on Bookmap. Hard to see there, but there you go. I try to look at as much real estate as I can. I don't know how clear that is. It's clear on YouTube. That's good. And of course, anybody can look in their rearview mirror and see 1,000 opportunities here. But, you know, what's going to happen there? What's going to happen here? This is the hard right edge. What's going to happen? That's what you don't know. That's where trading really comes in. That's why it's important to have a vetted setup. I think that's as close as, well, I don't know, maybe this is a misconception, but I believe that's as close as you're going to get to mechanical. Unless you're a good enough coder to put together a, part-time Larry or somebody put together a algorithm and then just, turn it on and go away. And that is definitely a panacea of a lot of people. But I don't think they realize, if you can't articulate what the parameters and the trigger would be for a particular setup, let's say VPOC migration. If you can't articulate that and jot it down or whatever else so that you can trade it manually, well, you have no hope in hell of doing it algorithmically because, a computer doesn't think. You've got to code every step. And I've done that, not for a trading algorithm, but I've been monkeying with computers and doing stuff for a long time, many years now. So, if you think that panacea is going to work, well, you're likely pissing in the wind, is my opinion. And again, this is all my opinion. And here the VPOC migration's working out. Price check at L3. If somebody in the rearview mirror over T-Lab or something go, yeah, well, price check at L3 and I'm short and blah, blah, blah. And that's all great. But it's not, the context of the day is up. So typically a short would not be in my trade plan. It's, I want to trade with the advancing army, not the retreating one. And there is obviously a point in most days where the context changes. But you only can know that after the fact. And if you're, some quick scalper guy could jumped on here and got one short and got lucky and away it went. And that's not sneezing money, that's 6 handles. VWAP. What are we going to do now? We're going to go VWAP to VPOC. We're going to have the same drama happen over here. Is the tanker turning? Will I be able to stop yawning? I need some exercise. That's what I need to do, some pull-ups. It'll get the blood pumping, I hope. Got to remember to do that. I don't know how to. Every hour, do some exercise. I've got a pull-up bar and the door and weights on the floor and stuff like that. So it's pretty easy to do. I just don't get so involved in this, and I don't remember, frankly. But it's real important. Mental acuity is real important. Had I been on my game yesterday, I would have had that that order canceled long before it was hit. But I was lethargic and, taken by surprise. And it's like, I don't know how in a Sam Hill that order got over there on IRT this morning. But I don't like that. That's for goddamn sure. And here we are back up. Look at us go. There's that mid VWAP. VPOC, I'm sorry. That was the full session volume profile, volume POC, joining up with the current RTH session. That's what this guy shooting up there just did. Yeah, baby. What are we going to do now? And they could rotate that right straight back down to the VWAP again. Or they could get a bunch of people short and then go whistling out the top. That's not anything that I have identified. We may be looking at an exhaustion here where we got 8.5 out, came back up, and the best we could do was 2, and now we're selling down. But remember now, this is only 2 points right here. I haven't got quite to 3 yet, so it's not scaled yet. Again, I think this is just a lot of random noise, picking people's pockets in anticipation of the main event. That's my take on it. Didn't monitor the audio. I guess I better do that. I'm assuming it's okay. Let's check. Doesn't sound to me like it's stereo. Is it only coming off of one side? 1, 2, 3, 4, 5, 6. So we'll do the old testaroonie here now. One earphone. Guess it's just my extra deaf ear. All right. Oh, good. Sounds all right to me. Good enough for me to listen to later. And that's the point so far. And anyone who's joined, Antonio or whoever, it'd be great to get a few people in here and get some dialogue going. Get some people on voice, throw up a Discord or something so everybody can get on voice, and it'd be fun. Nice. Trading's a lonely sport, right? So it's good to have, and never mind, it's good to have feedback. As the old saying goes, 4 eyes are better than 2, right? More people looking at stuff, the better off it goes, usually. And 31. Our IBs are still open. Now, here's an interesting fact about the initial balances. We need to jump over here and look at the statistics first. So here is our open type, right? Here's the statistic of 97.8% of the time, one or the other is exceeded. We also have 68.3% the IB high will be taken out. 50.9% the IB low will be taken out. And now we get into the interesting ones. Only 31.9% of the data set is both the IB high and IB low taken out. Okay, so that means a neutral day, both of them. But here's the real killer. Do the math here and think about this for a second. This is 97.8 that one or the other is taken out, right? That means that 2.2% of the time, neither is taken out. So if you think about that, that is one hell of a statistic to lean on. If you're coming towards the end of the day and you have not had one or the other initial balance levels exceeded and you're near one, that's a pretty good statistic to lean on. That's the best statistic of them all. Well, no, it's not. .7%, 2 times the IB high or low are taken out. In other words, twice as far as the IB high or low. Extend that range. So there you go. Some useless something to think about. It's not useless. It's actually valid. I actually did very well on that with that exact philosophy a week or two ago. That's what put me into within striking distance of one more trade to that milestone. Is I was $600 or $700 on that one trade that we would not close the day with the, betting against or trading against that 2.2 percentage or percent probability. That's one of the best. Okay, now what are they doing? Oh, well, we got the IB. Okay. We got the IB statistic out, and are we going to have an IB continuation now or an IB failure? The conventional wisdom is that if it's a directional day, the probability is likely for the IB continuation. Makes sense, right? If it's not, if it's a rotational day, then the IB failure is by definition a mean reversion trade. It's outside in, right? So, it would have been outside in. So now we can see what happened, and I had a great brunch. I'm going to step away early to go do my normal daily stuff ahead of the world famous FOMC story. So was this a breakout and retest? I guess it was. You could say so, I suppose. My problem is I thought those broke out. I thought that well, let me rephrase that whole thing. My initial opinion was, or my initial understanding was that the expected move on a bar trade was in the direction of the breakout. I guess it could be either way, a head fake or didn't find any enough fuel up there to continue on or something like that. Don't know. Well, the FOMC stuff. Here we are. A little bit of a bump on the number, and now Jerome is speaking. So just stand by, continue to stand by. The book's not too thin. It's in 20s anyway. 20s and 30s. I would have expected less. I'm sure the number of it a lot less. But this is just, if you want to give away anything you've got, this is the time to do it. All right. So now what? What is happening now? I should be listening to this, but my phone seems to have dropped a important link. Probably too late now. He started at 1:30. I don't think he goes for much more than 30 minutes. Would certainly not be trading right now. They seem pretty intent on getting it up there. Whether they're going to get to the top of that MC or not is another story. And what's going to happen here at the at this current high, just to give you some perspective, that's the high of the MC from the 10th. And then we've got 58.21 quarter above that, and a naked volume point of control up here, and points north. Definitely not the spot to be calling tops, picking tops, whatever they call it. Well, they're just, there we go. There's a new high. I don't see a lot of stops up there. That's kind of interesting. They're definitely exuberant. I'm terrible about getting on things like this. I'm not very good at getting on anything, but lately, but these kind of, I just continually believe that the minute I get in, it's going to immediately, that's when it's going to turn, right? So I just stay away. Don't know. Is Powell still speaking? I can safely say I have no idea what they may do here, and I will certainly not throw a trade out there to find out. Maybe if I had my macros set up properly, I got to get my low volume node stuff over here and work out a system of the high time frame. Then I could trade these micros. Then that's not a problem. Look at these big levels of liquidity laying in here, 128 contracts. Now, the interesting part about Bookmap, you see, is it shows you when that order came in the book and when it lifted off, which you don't get in the Dome, unless you're looking at, I don't know what. Time and sales doesn't even show that. Let's trade them out. I don't feel like I can see enough of the market like this. But I don't want to lose perspective of the scale. There we go. That's better, I guess. Wow, 220. Man, that's coming up cash close and the school run once again. Tonight's another multiple one where my wife also goes. I'm assuming that Powell is no longer speaking. I still think discretion's the better part of valor here. In terms of just standing back. I got to get a lot of stuff set up over on the micro side if I'm going to be able to jump back and forth there, which may be a good idea. I would have no idea what they're thinking about at this point or what to expect. I mean, the market's either going to go up or it's going to go down, right? But there's no level here for me or anything else. And this liquidity, as you can see, these bracketing algos are just crap. Now, this is probably real here. This was, because they all traded out. But this bracketing algo is just an annoyance. something to point out here is that this is 10 points. This little drip right here is 10 points. 10, 20, 30, 40 points from here. That's why being scrolled in or having some sense of scale is really important to me. And I don't really feel like I have it all the time here. And I don't like that. See, it's 37 to 40, that's 3 points. And 10 points back up. So, 1.5 of these increments is a stop. That's ridiculous. And there's $1.50, so there's five handles per. I just don't like the way this is working. There's 1 point. That's about as close as I can get to keeping my perspective. And still see something in the background. Which is really important to continually look left, right? Because you could be into a big consolidation area from previous, like here, down here. You know anything about it. Here was a consolidation area, and where did we stop and turn around? Oh, my. Can't imagine that the MOCs will have much impact, but you never know. We're clearly up and away in terms of volume. So I'm going to get rid of that other quote page. We're now trading 1.4 million in the current I'm sorry. What the hell? Oh yeah. Jeez, I was looking at the wrong. I was shocked there for a second. Yeah, we're trading 1.4 million in the M contract and 500 and something. 538,000 in the H. So, adios, amigo. Here's what I'm talking about, this quote page that I had built right here in order to see when the volume switched. That's H, this is M. So that's how it works. And I go like this, boop. I don't want to. I just want to get rid of it. There we go. I didn't want to save it. So we're nearing 20 handles off these lows down here. 27 to 47. But I really don't think that this is the right. I don't think it's a prudent day to be doing this, especially with minis. So I will not, unless something changes my mind here. We're nearing the MOC, so let's see what happened there. If you really squint hard, this could be considered outside in setup or a baby mean reversion. Baby mean reversion here, but that's just making stuff up. Like I said. Okay. Okay. All right, so here we are, boys and girls, fellow traders. Here we are. Much as I love to short, this is higher lows and higher highs. So, it's painful just watching. But I'm sure that I will. I am sure that things will stort. Jesus, I can't speak anymore. That my tongue will work later. I'm pretty sure that it's going to sort itself out, and we'll have a little bit of a normal. Trying to think of something here. Balance to our week. Let's see what is. Let's see what the tools, economic calendar. Let's see what this week brings for the economic calendar. So there's Monday, Tuesday. We don't need much about any of that, do we? Here's Wednesday. And Thursday, what have we got? Well, we got initial jobless claims, the Philly Fed. That's usually a major market mover. And existing home sales. And then Friday, we got the usual Baker Hughes and crude stuff and a talking Fed. So tomorrow's going to be some news at 7:30. and 9. 10-year bond or 10-year note tips auction at 12. All right, so there we go. That was investing.com, which I I've mentioned way more than once, and it's the website that I've used for years for reporting and numbers, and you can set it all up however you want. It's just investing.com, and it's free. And, free is good. Well, I had a problem there with the screens, which you're obviously seeing at the moment. It was the display was, or the source was goofy. Now I got it sorted out. Still doesn't seem to be right. Oh, there we have it. Yeah, it is. Okay. Wow. Amazing the stuff that can happen just by accident over there. So bear with that screen flashing around. I wanted to test out a couple of things to make sure I have everything correct, and I do. That's weird. I'm glad I noticed that. That's to my left, that monitor on the stand-up desk to my left. So if I don't happen to see it out of the corner of my eye, well, oops. And there's that market on close bump down. And continues to go down, it looks like. Wow. Well, we're getting close to the value area high, if you want to believe that. Shucks, there was a short, huh? God damn. Well, I'm getting sick of this bumping my mouse into stuff. I gotta think of it, something else to do here. Wow, look at it go. Son of a bitch. That that was a hell of a downdraft, huh? Ticking off. So there, what do we got? We got 10, well, 15 points. I guess it's not too huge. I guess it's not too huge. She said. Yeah, this liquidity was sitting down there for an awful long time. Not much there, though. I guess. If you look at the stops. So we've got 8 minutes till the close. We've got 3 minutes till the next potential MOC bump. So I'm making a commitment here that I'm going to take at least one trade per day and not force them on a true setup and see how that works out. I've got to do that. So it's a commitment here on the stream now. I can't weasel out of it. And 5 minutes to TAM time. This would be the kind of a day when well, first of all, I was going to say the 12 to 1 trade, but not, I don't know how applicable that would really be in this case with the news thing, but the closing swing trade could be applicable because there's a lot of volatility and, CYA going on. I thought I had tested the chat this morning, but I don't see anything here. I don't know what to think. Oh, no. That seems to work okay. All right, good. I thought I had put some chat in there earlier, and I didn't see anything. So I wanted to be sure something else goofy hadn't happened. Here. What are we doing now, brown cow? This could be where the slow market, the ETH, starts to be attractive. Two minutes. Let's see. I bet there's a pop on the closing swing trade. What do you want to bet? Quite the day, huh? And you notice that they've taken it up, just tested outside the VPOC, and now they're right back down, basically dead on yesterday's close. Will they bring it down to wick test over here? I don't know. That's an unknown. Something's happening, though. They seem like they're pretty excited to take the damn thing lower. But where are we? See, this is where the benefits of looking left comes to play. Get rid of this scale. Where are we? Well, we're right down here, right on that on this consolidation and this test of the consolidation, and here we are again. That's why it's real important to look left, or in my case, I can always glance over here and I've got all of this happening. I can see the whole day if I want, and this is all Fed speak here. So I'm assuming he said free money. Or some equally stupid shit. He's at least standing his ground. Okay, mere seconds here till TAM time. The alarm, cash close, stream close. Back at 8 o'clock tomorrow morning with bells on, and hopefully be. And here's that last minute shift. We've been having this every day for the longest little while. Right on the close, on the cash close. Now they're going to put the squeeze on them. They're pretty much squeezed out, I would think. Okay, so I can I just typically close the stream off at 1500 at the cash close. I can let it run if it would be advantageous to anybody. I kind of doubt it. Drop something in the chat if that would be helpful. Now I'm gone between, until around 4-ish or later. So that would kind of put another hour or two of stuff on the stream. But anyway, back tomorrow morning at 0800 for the pre-market and preparation ahead of the open. And then away we go. Off like a herd of turtles. Have a great evening. Do something for yourself, health-wise, family-wise. Get out, get some sun, get some exercise, and then, do your study and your homework refreshed and ready for the morning. All the best.